Welcome, everybody, to another week of Wealth Wisdom, where we're helping you build wealth and legacy.
Companies are like an organism trying to survive.
It's always a risk when you're investing in a company that's purely tied to someone's brand.
45% of Americans have gone into debt for a Disney trip. Welcome back, everyone, to another week of Wealth Wisdom. I'm your host, Justin Noby, and here are my esteemed colleagues, Eric Benz and Bill Ryan. What's going on, guys?
Hey,
how's it going?
Happy holidays. Merry Christmas, dude.
Yeah, Merry Christmas, guys. You guys ready for the holidays? You got the lights up?
Lights are up.
Yeah. The reefs are up. I did the lights. My wife took care of everything else. I obviously
What a saint.
tearing up my hip playing old man hockey a couple weeks ago put a detriment into anything putting in up holiday stuff for me. I've been crutching around the last few weeks. But I got to be honest, my wife is the bulldog in the family, and she does all that stuff anyway. For the most part, I just where I can. But I got the lights up before I got hurt. That was the most important thing.
Yeah. I almost didn't get the
we've
lights
had our
up.
oh god.
Go ahead,
Yeah,
Eric.
we've had our tree up since 3 weeks before Thanksgiving.
Oh,
Yeah,
wow.
We're crazy people.
A real tree?
No,
Or-
fake tree.
A year-round tree.
So we did one real tree, and
Yeah.
my in-laws, they don't even put up a tree. They might just do a Charlie Brown tree. So they had a really nice fake tree. So now they gave us their fake tree. So now we have one room with the fake tree, and then we have one with the real one.
We did the same thing this year.
I think that's what we'll do going forward. We'll have one room with the fake tree. We'll have one room with the real tree going forward.
That's a nice touch. We did that this year as well. It's been great. I almost didn't even get the lights up this year because it was like a whirlwind of life. Thanksgiving hit. I didn't get them up then. And then all of a sudden, I just got them up last week, and I was questioning, do I even put them up for a couple weeks? But I don't know. Maybe I leave them up longer. How long can you leave lights up?
I like the second weekend in January. Keep it through the new year. Keep it through that first week. And then that second weekend, carve some time out on that Saturday, Sunday.
Yeah.
Pull them down. Pull
I
them
love
up. Get
January.
them in your little device where we can wrap them up in that we invested in.
Oh, wow.
That's what we'll do. We'll keep up. So I like it. I feel like after Christmas, it's like a little dull. You know what I mean? So I think it's nice to have it up for a couple weeks. And then it's all going to come down.
You're saying no, Eric?
Oh yeah, and go all the way through January. Winter's long and depressing. Like the longer you have the lights up, the better.
End of January?
Yeah.
I've gone to Valentine's Day before.
All right.
All right, dude.
Maybe I will extend it a little this year.
I'm trying to, but you see the electric bill go through the roof. I got a timer this year. I'm not running the lights until in the morning when I'm waking up. Got the automatic timer.
We got the timer on everything. We got the timer on the tree. We got the timer on the outside lights. And it's nice.
It's the way to do it. It's the way to do it.
What's I have a question for you guys. What is an appropriate amount of presents to give a kid? Like at what point are you like spoiling them?
What a great question.
I got a kid coming on the way, so I need to know what's the policy.
Oh man. So yeah, this year we did we do a couple gifts and then Santa brings the rest.
I would go, you got to look at needs, right? What do they need?
Yeah.
So there's always going to come up with stuff where they need this, and we're going to buy it for them anyway, right? So
Yeah.
they may
Push it
not
to
have,
Christmas.
like, oh, we don't have enough warm pajamas, right? So let's get a couple pairs that they ask for or something. They're always going to ask for stuff that they don't need, right? I think my kids have probably, I don't know how many of these Squishamallow toys. What do you need these things for? My daughter, she has a bed.
They're very popular.
Kind of.
Not as popular as Beanie Babies.
It's just like a squishy couch or something. It's like nice, just like put next to your head. Give them what you can afford, but give them some wants. I would focus on the needs first. My biggest thing is experience. I'm so big on getting people an experience. There's too much material things. Doesn't get used. It actually creates aggravation for me because I see them sitting around. I got to pick them up later and stuff like that. I would so much rather take my kids to a sporting event, a theater thing, go to somewhere together as a family. To me, that is the best thing.
No, I 100%.
I bought my parents Sebastian Maniscalco tickets. My mom's Italian. She gets a kick out of his humor, so I got my parents that last year.
Oh, that's cool.
That's the type of stuff that I want to give people, because I feel like that's better than getting more stuff that we don't need.
Yeah, and you're right on the stuff that they actually need. I remember my mom like literally wrapping individual socks, like just to create a bigger pile under the tree. It's just more fun unwrapping.
Oh, for sure.
Yeah.
There's a meme. I got a photo of a guy's feet up on the couch and holes in the socks. It was like, gentlemen, we've got 5 more days. Hang tough. It's like the one time a year you get socks.
Yeah.
Yeah. And I will say, if you're going to go a little more expensive on the socks, I got alpaca socks last year, just a couple pairs that cost a little bit more, but great set of socks.
I'm sure they're very warm.
Yeah, very warm, comfy. And I like them better than wool. They're just a real nice, comfy, warm sock.
I think a lot of people tried, just to add to that point, and then we can dive into what happened this week, is the keeping up with the Joneses is a real thing. This year, there's a thread going around with the moms in our social group, and it's, hey, did you get this big gaming system? Everyone's getting it this year, or like the gift of the year. I discourage that. I do what's right for your family, what's right for your kids. It is a huge pressure. There's a lot of pressure there. And I would just caution people not to go into debt.
You want that credit card payment paid off in January. So
exactly,
you can't do it.
Yeah.
Don't be spending 100, 500, whatever it is in interest to spread it out over January, February, March. Do what you can afford. Just you got to be disciplined. You have to stick to it. It's just, you can always get them something else down the line, but don't be going into credit card debt. You can get something later in the spring, something like that.
Absolutely.
Getting the gaming system?
No, we're not.
Yeah.
We
Oh,
are
you're
not.
so lame. Yeah.
We don't need more of it. All right, so let's get into it this week. Big news, maybe not. We all expected it. We actually made a video way in advance to announce that it was happening, and we were able to use it. 25 basis points were cut by the Fed. Markets did not like it, and they took a dump. I'm exaggerating. I don't think it was a massive dump, but what do you guys think, Eric?
Yeah, I mean, it was more, though, like on the forecast of next year, necessarily than this rate drop, right? There was more than they're not going to be dropping them as many times as they expect in 2025. And yeah, some of that stuff had already been priced in the market. What happened, right? Any change in the market, good news or bad, it's going to react. It's going to react very quickly. That's exactly what we saw. I think it's just a short-term blip. Companies are continuing to do really well. Things still look really strong. I, for one, and I've been saying this since the beginning, I'm much more in favor of slowly lowering these rate cuts. I don't want to get behind it too much like they did, unfortunately, with raising rates, right? They were way behind, which caused inflation to spike dramatically. I feel like they should have been doing that well in advance. With the markets doing well, wage growth was still better than inflation. All of these kind of key metrics. Labor market, we're still doing good. Jobs, they actually put more jobs, which was odd, right? This is the first time that they've added more jobs when they did the revision. All those kind of key segments have done really well with the rate cuts because inflation, like they always say, it's very sticky. You think you get rid of it. Next thing something comes up and it spikes back up again. And I think just even looking at this latest presidential election, that was a talking point. Every interview, like inflation, I think that's something that we really need to be careful of. It doesn't hurt the upper class, right? They're like, oh, my expense is a little bit more, but lower middle class, even upper middle class gets affected a lot worse when inflation goes up. It has a big ripple effect in the economy. So I think keeping that under control needs to be a major priority. And I think by giving those expectations that we're not going to be lowering rates as quickly, that's a huge thing. Okay? It's going to be a major sticking point, right, over these next 4 years to really take off like they're saying. I think we have to make sure that we're in control.
Listen to a lot of post-election recap podcasts, and a lot of people said that inflation was one of the number one reasons America voted for Trump this year for change, because it is hurting so much. The housing prices haven't gone down as much as people have expected. That's a big part of inflation as well. What's your take on why the housing market is doing what it's doing right now?
We've already seen the rate of price increases go down dramatically in the housing market. We saw it rip 40% over the last 4 years. I don't know what the rate was this past year, but dramatically lower. We'll continue to see that stabilize, but prices aren't going to correct from where they are. In the US, we're not seeing home values drop dramatically. One thing, going back to inflation as a whole, I know the market reacted and there was a big drop of 3 to 4% in the NASDAQ yesterday. It looks like it's going to be down today. I still see it as a positive. Year over year, inflation in the US was 2.7%. Globally, inflation was 6.8% in 2023, went down to 5.9% in 2024, and now it's expected to be 4.5% in 2025. The US is already below all those levels. So we're waiting for the rest of the globe to catch up. And it seems like it's moving in the correct direction. I think positive things are ahead for the stock market as a whole.
Yeah, that's great. And I think the other thing, just why the market reacted, I think there's a lot of the new administrations coming in on, not to get political, but new administrations coming in, they're talking about tariffs. No one really knows what's going to happen there. So I think there's a little bit of uncertainty in the market. Bill, do you think they've priced that in, or is that we wait until January and see what happens and markets?
Yeah, I'm sure. I do believe that some of this tariff talk, you followed Donald Trump throughout his career. What does he do? He likes to get a point of leverage. He likes to push on that leverage when making a deal with anyone.
You think he's bluffing?
I'm going to hurt you if you don't work with me. Like that, I think what's going to end up happening, he's going to use that as a negotiation ploy to do some stuff to help improve things. At least that's what I'm hoping is kind of his career. And that's what I think is his goals. He's saying, I'm going to do these tariffs. I'm going to make it so hard for you to do business in the U.S. and you need the U.S. so bad, right? We bring you so much money. We do so many things for you that now's the time you're going to start doing a little something for us. And if you don't, I'm going to tariff you. We're going to bring you jobs more. We're going to have more of this stuff done in the U.S. And that's what I'm hoping is going to happen. But in the meantime, if he does go that route where he has to press them a little bit, that could cause an inflationary measure. So we'll see. Hopefully, my initial point is more going to be what's going to happen as opposed to my latter.
Now, do you think, is this a point where people should, and maybe we can't speak on this, but should people be like, is it a quick like Christmas sale on equities? A Black Friday of sorts, everything's on sale, let's buy? Or are we being more cautionary right now with the market?
I think we just stick to your plan.
Yes.
So if you're a long time equity holder, it could be great buying time right now. If you're someone who's in retirement, stick to your plan, stick with your allocation. If you need to shore up some of your short-term investments for your spending for the next 1 to 3 years, make sure that's in place so that if we do go through some turbulence, you're still in good shape to make sure that your daily bills, insurances, mortgage payments, rent payments, lifestyle expenses are in securities that are going to have, they're going to be in securities that don't have your capital is going to stay steady, right? Not subject to swings in the market. But that bond matures and you have that cash ready to get moved into your checking account to spend the stuff that for your expenses 3 to 5 plus years down the road. You're in a diversified equity environment that's going to continue to grow, outpace inflation for you so that those expenses down the road are going to be met and you'll also have appreciation in your portfolio. If you stick to those principles, so really just, it's more like looking at your current asset allocation versus your cash flows and making sure that's lined up. And if you're someone who's younger and you say, I've got a 10-year plus, I've got an 8-year plus time horizon, maybe it is time to say, let me take a little bit of money out of my emergency fund and maybe I put that in the market because I know I'm getting some of these things at maybe a slightly cheaper rate than if I were to buy later on. Maybe And not necessarily dump it all at once, but maybe do it over the course of the next month or two and see where things stand.
Like dollar cost average in.
Yeah.
Yeah. That's great. Yeah, because there's a lot. I just want to, help people out at home. I think looking back on 2024, it's always a time for reflection. We've had our newsletter that's been going out the entire year. Eric, you want to kick us off with a few key, just looking back on 2024, wrap up and review, and maybe add a little of what you think's coming down the pipe 2025?
Ooh. It's a lot of the same trends that have been going on. The big winners for us this past year, the last 12 months, have been everything related to AI energy. It's done incredibly well, and we think they're going to continue to do well in 2025. And it's got tons of cash. They're investing in AI infrastructure. Companies that have done well for us, Vertiv, which does the cooling for the big data centers, Arista Networks, which builds the switches for big data centers. Those kinds of companies continue to do very well going into 2025 and beyond. And then energy companies. No, it's not. But I'm just saying these trends will continue. Same thing on the energy side. Increased demand for energy, going to continue as well. And we think a lot of those utility companies that have done well are poised for growth. Utilities and the ones that are building out nuclear energy, things like
among Eric, we're diversified among nuclear, but we have space in gas and in other things as well, which all hopefully will continue to grow. So we're not just full on nuclear, although some our nuclear energy companies have obviously done incredibly well for energy, which we had bought a couple of years ago, and it has been an unbelievable performer for us. I think among different utility companies, we're going to continue to see growth regardless of their energy source.
Bill, I think continuing the trend, what did well for us this year was actually mega cap companies and large cap companies. And with all these different AI tools getting introduced into them, I think they're only going to continue to do better because the cost cutting is going to be just insane. I pulled an example of all the ways Amazon is using AI to cut costs, and it's incredible. Let me just run through them super quick. Management. They have AI powered demand forecasting that helps Amazon. Amazon's using AI to optimize its logistics and routing. So it's figuring out all their delivery routes, the fastest ways. It reduces fuel consumption, delivery times. They have warehouse automation from AI. So they have all these robotic systems. Amazon's Kiva robots are all powered by AI. Chatbots are reducing their labor force they don't have to have as much people. Customer support. But it's AI-driven customer service tools.
Problem, right? They're able to get it fixed up. Where it's not like having to go through 5 different channels of people.
It's a robot that's doing it. Fraud detection. A ton of Amazon's revenue is from their targeted ads. And that's only gotten better. Operational efficiency, so energy management, dynamic pricing. AI literally determines what's that highest price we can get to where we can actually sell the product to the person before they make that decision that they're not going to buy it. That's just Amazon. And you have to figure every large cap company has the scale to use AI to cut costs across the board. And I just think 2025 is going to be another big year for large cap.
Yeah, and it's funny. That's on like an Amazon, but now they're even saying companies like Chipotle are going to be starting using more robotics and stuff like that, just to get the more laborious stuff. Like guacamole, we have this machine that can run the gambit for us. They can just have the people doing the finer skills in the restaurant. So it's funny how it's touching with an Amazon, a major retailer, and things along those lines. But then you have these other companies where it's going to help continue to provide efficiencies and make them even more profitable. And as we see time and time again, as earnings go up, we tend to see the stock price go up, because all stock price is a multiple of earnings, typically. So that's the kind of the horse carrying and the cart. Hopefully we continue to see some growth there.
That's great. And you already touched on other things that happened. Eric, you talked about global inflation easing, which has been great. China was interesting. We talked a lot about China and the global effect of what's happening there. especially with Evergrande and their real estate for 2024.
Yep.
We're looking at China a lot. In a similar vein, you had the Japan carry trade that happened. They started increasing rates, and I think people are expecting them to do so again in 2025. So that's something to watch as well.
This time a little more expected.
Much more expected.
Last time I don't think it was expected, right?
And I think we've also seen with the AI boom and everything, you've got EV expansion as well. I think that's very interesting to see where that market goes. Will they continue selling them? Eric, what are your thoughts there?
Yeah, I assume it continues to trend up, and hopefully they make a bigger dent as far as competition with hybrid vehicles. I remember Toyota was the big winner early on in the year because U.S. consumers actually still want the optionality of being able to fill up with gas and electric. So it'll be interesting to see how quickly the consumer switches to full electric.
That will be interesting.
People just don't want to be inconvenienced, especially in the US, right? We go for convenience a lot more. If you're worried about making it a certain distance without having to stop your recharge, I think as they continue to build out chargeable stations, one big thing that I'm not always in favor of government intervention, but I really would like to see these carports and charging stations be uniformed. I don't care if it's a Tesla,
Sure.
Chevy. I really think that they should push so that everybody can use, no matter what kind it is. I think that would be one of those things where government intervention would actually be very favorable for the consumer. I don't think each car company needs to have their own type of charging station. It
That would
should
be great for the industry.
Yes, that will help and benefit everyone. I understand these companies want to, hey, we're spending for this infrastructure, we should be making money off it. But for the overall good of the industry, we should go to a more formalized charging station where all cars, right, that connection, that everything like that should be the same for all vehicles. And I think that would be a huge plus for everyone. The car companies would benefit from it. The consumer would benefit from it. It would be a total win for everyone.
Bill, what's the number one prediction you're seeing or you want to make on record for 2025 right now?
Yeah, we'll go back at the end of the year.
No, we're going to say Bill was right.
Yeah, that's a tough one because I've been out of it the past 2 weeks where I've been sitting almost immobile.
Yeah, I know you were
with nerve pain going down my
You've got a serious injury.
Thinking that I was still 16 years old, ripping around the hockey rink. But number one prediction for this year, I think we're going to... You really got me here.
Eric, do you have one?
Well, let me take, because
Eric, think a little bit. Let Eric take it.
Do really well. That's my thing. Whether it's Magnificent Seven or companies that do a lot of business with them, I think they're going to continue to do well because those companies are making so much money, and they've already, you know what I mean, come out and said, we are going to spend so much money. Our CapEx is going to be so much because we will not be left behind. I've heard that in almost every earnings call. Every time they talk, they're like, we're not going to be left behind because the cost of being left behind is worse. The overspend is actually better than potentially being left behind. Those companies make a lot of money anyway. So it's not really negatively affecting them. It's hurting them. So they're going to continue to spend. They're going to have this high CapEx to build this stuff out. Almost like if you think back in the early part of the internet age, right? Some of these companies, Amazon, great example, right? People were like, oh, they're never going to make money. They're not profitable. But all Jeff Bezos cared about, he was like, I'm going to build market share. I'm going to get market share. I'm going to gain market share. Every time we make money, or I'm putting it back into market share. I don't care about being profitable right now because I know what's going to come down the road 5, 10, 15 years from now. Look what that company has done. Amazing. The things they've been able to accomplish over the past, 25, 30 years. And he had the foresight to do that. I think that is the same thing what we're seeing here with AI. They're going to continue to do that. So I think those companies are going to do really well. And then the companies they do business with to help that build out, that's going to be huge. So I think some of the holdings that we have, Arista, Vertiv, like you mentioned before, Eric, I think those are going to continue to do really well, especially because they don't have a ton of competition So that's a nice place to be in. I'm always a fan of utility companies. It's nice, steady earners, right? They tend to give a nice return on equity, pay a dividend. I think they're a great way to have exposure to the stock market. Have the downside risk, I don't think is very great with them, because I don't think we're in an environment where we're going to be raising interest rates really high, and commodities and stuff like that have stabilized. But as long as they're not huge swings, those are always going to be great places and get a good rate of return, beating inflation, and also adding a little bit to your portfolio.
So your prediction is more large caps continue to grow, maybe within AI also.
Yeah, but I do, because I think there's going to be, as rates go down, there's a lot of opportunity there. You just have to be a lot more selective, right? Because you just have to have the right idea, make sure they're in a position to grow. I would stick with small cap stocks that are profitable, growing and making money. Some of the high flyers, that's where you can get burned, right? You want to avoid those small cap stocks where, geez, I think it looks good. Something happens, they go down. You want to avoid those 40, 50, 60% losses. Those are very tough to recover from and really detriment to your portfolio. So look at small cap stocks or mid cap stocks that are making money, growing money. And if they are expanding, when they do those expansions, how quickly are they making money? We don't want to have a huge ramp up period. I think that was one thing when we bought the company Kava. People would look at the valuation of it and they said very high valuation. You're valuing each store at this crazy amount. But I think we had the foresight to look at it and say, okay, look what their expansion plans are. They're looking to grow the stores by this many. So you guys are looking at it per store. Where are they going to be in a year from now, 2 years from now, 3 years from now, 5 years from now? Their stores themselves are making money. Their stores are growing their profits, growing their margins, and they're expanding. So the valuation or the PE ratio didn't tell the whole story. It didn't show what the growth looked like. And that's why I think we were able to do extremely well with that stock, because we had a little more foresight than looking into traditional metrics. And so that's what, when you're looking at a small cap stock, keep those things in mind, and also make sure you have a long-term view, because those stocks are going to be a little bumpier in the short term.
Eric, what's the number one prediction for 2025?
It's going to be a good year. I think in the U.S., I'll say the big prediction is U.S. stock market will be up another 20%. Okay.
All right.
In the U.S., we've been shielded. I know the economy had been slower past few years, but we've been shielded from what a lot of the rest of the globe has been experiencing. China, the second largest economy in the world, they've been struggling. And a lot of it's to do with their housing industry. Used home prices in China have declined for 39 straight months. They're down 30% from their high in 2021. This is like US 2008 crisis level stuff.
Yeah.
60 million unsold apartments.
We wrote about that. Yeah.
Yeah, exactly. So we're on top of things, which is the 60 million unsold apartments. It's equivalent to the entire population of France. There's cities with empty skyscrapers. Okay. This has been going on for multiple years now. Second largest economy in the world. Now China's pumping in stimulus. If there's recovery there, money's flowing into the system, the rest of the globe's catching up to the U.S., it'll only benefit the U.S. economy even more. Stock market will do well from that. So it's more of, obviously, we've talked about the opportunities on a micro level with different companies, but as a whole, I think we're going to see a big global market recovery as well.
Yeah, I'm looking at inflation. I think the IPO market could blossom further in 2025, which would be great. If rates continue to drop, more money will come off the sidelines and go into smaller, investments. We don't want it to get frothy, but I do think the IPO market will happen. I think more IPOs will come out. I've heard Stripe is one to watch for IPOs, which could be cool. Energy is going to be big, right? AI and energy continue to rip. And I think nuclear, hopefully we've talked about SMRs and nuclear. I think that bullish on that as well. So crypto, throw that in there as a 2025 thing to watch. I think we'll have at least one more ETF that will come out.
Did you see what crypto has done the last 2 days? It
took a
seems to
massive
be,
dump.
I mean, just like the stock market, heavily correlated to what's doing, right?
It is, but it has bigger.
Yeah, exactly. It's beta, you know what I mean? But
It's huge.
It's always been correlated to the stock market. Look, every
It
time
is.
the stock market goes down, it goes up.
Goes up
Always.
further, it goes down further.
Yep. It's just a riskier thing. On that, MicroStrategy, I think, was just inducted into the NASDAQ, which was interesting if you're into that crypto space. You know, what Michael Saylor has done with Bitcoin, some wild stuff. That's of interest to watch. I'm not saying you should invest in crypto at all, but it's interesting to see.
I was listening to Michael Saylor. He said that's interesting. That's why it's a good reason to invest. Interesting. So I always thought that was funny.
That's a great
He
thing.
was. There's some old videos of Michael Saylor floating around the internet right now, and he's talking about the iPhone, saying this is the number one product of the next 10 years, and he was spot on, right? Who doesn't have one of these?
Oh no,
it is interesting to see what he's doing.
Really smart. It's just that one. He just doesn't give you the reason why it should go up, other than the fact that he feels like it's interesting. A lot of people are into it. What I'm really interested in is who's going to make crypto a utility thing. You know what I mean? That works, right? Something like that. Not like how we move money and stuff like
that. Not financial advice, but if that's what you're looking for, I would look into XRP.
That's what a lot of
in
people.
Ripple. Brad Garlinghouse or whatever. He's been on all those talking head shows, Squawk Box, etc., where we'll see. Something to watch as well. Guys, it's been a pleasure. Let's get to it. I know you guys are busy with the holiday shopping and year-end client stuff. Merry Christmas, happy holidays.
Hey, Merry Christmas, man.
Merry Christmas, happy holidays, everybody.
Yes.
Here's to a new 2025.
Here's to financial success for all of you in 2025.
Yeah.
That's it.
Bye-bye, guys.
All right, bye.
Bye.